Hello, fellow Rebel capitalists. Hope you're well. Wanted to go over a story that's talking about unrealized capital gains. And I don't know if you guys saw Janet Yellen come out this morning. I saw a video, I believe it was on CNBC, where she was talking about unrealized capital gains and saying that she thinks it's a good idea. That should come as no surprise because she's just parroting anything from the Biden administration, but this should scare you regardless of what your net worth is, because what we've seen throughout history is when they start a tax, it's always on the billionaires and millionaires, or millionaires and billionaires, however Bernie Sanders says it. But then it gradually comes down and down and down to a point where it affects everybody. And for those people that think they're not paying income tax, well, you are in a sense, because you're you have taxes coming out of your paycheck in the form of payroll taxes that are going into the Ponzi scheme that is Social Security, among many other things. So my point is, going back to 1913, we had that income tax show up that was supposed to be just on the J.D. Rockefellers or J.P. Morgans of the time. But then gradually we saw that come down and down and down to where it was affecting the poor and middle class. And today we see that playing out right in front of our own eyes. And it started with a tax just targeting billionaires, let's say. And it's the exact same spin that the politicians put on an unrealized capital gains. Oh, this is just going to affect the billionaires. But I can almost assure you that if this goes through within 5 years, it will affect people that are considered quote unquote middle class, depending on what type of property they own or stocks. Why is that? Let me go into that prior to getting into the article here, because it's important that you understand why I hold that position. One was what we've seen throughout history, but also we have an economy right now that is completely dependent upon stock prices, asset prices continue to go up and up and up. And to have these asset bubbles get bigger and bigger and bigger. And you'll notice the amount of tax revenue that is generated by the federal government really doesn't have anything to do with the tax rate, the highest marginal rate. It usually has everything to do with the stock market. If the stock market's going up, 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 sure enough, revenues increase. If the stock market tanks like it did during the GFC, what happens to tax revenues? They go down regardless of what's happening with the rate. So my point is, because so much of our economy and a greater percentage of our economy daily is as a result of asset prices going up, they're going to have to find some way to tax that. Because if they continue to tax incomes may stay at the same level, but the purchasing power of the individuals increase, I would say temporarily, as a result of those asset prices being completely disconnected with the productivity that's happening in the real economy. Those asset prices continuing to grow, and the politicians having no way to tax that growth. And that's what they want to do. So the only way to do that is an unrealized capital gains. That's another reason why I think the probability of it coming to fruition in the future is high. Let's get into the article. This from the Wall Street Journal. Tax on billionaire. Actually, let me increase the size, folks. Bear with me. Okay, tax on billionaires, unrealized gains will likely be in this budget package, Democrats say. I've been reiterating the quote from Lenin over and over and over again, where he said, there's decades that go by that nothing happens, and weeks that go by when decades happen. It just seems like a month ago, we were talking about California implying they'd do something like this, but nothing at the federal level. We heard about a wealth tax at the federal level, but now we're hearing about both. And my point is, when I was growing up, in order for something to go, in order from it to go from just being mentioned in California to now all of a sudden the federal level, that would take 3 or 4 years. Now all of a sudden we see it happen in 2 or 3 weeks. And so another reason why I think we're going to see something like this very soon. The proposal, which would likely affect fewer than, I love this. They always spin it this way. It's only going to affect 1,000 of the wealthiest U.S. taxpayers, would help pay for Biden's social policy and climate legislation. Yet notice they don't give you any specific numbers. Look, if I had a tax that would only affect 1,000 people, but it would help pay for 1% of a spending package, you wouldn't say, well, it's going to help pay for it. Well, not to any measurable degree, or not to any degree that would actually be impactful or meaningful. And this is how they always spin things, by not giving you the specific numbers. Because if you actually see how much revenue could be generated, and this is if the wealthiest pay the taxes, which I don't think they will. They always have a way of getting out of it. You can say that's bad, but it is what it is. So just assuming they paid this and they didn't move their assets or protect it in a trust or do something like that, then this would generate, let's say, $50 billion. Okay, it's not going to generate 5 trillion. It's not going to generate 10 trillion. And these are the types of numbers we're talking about, that if we're truly going to get serious about helping pay for Biden's social policy and climate legislation, that you need 10 trillion, you need 20 trillion. And you say, well, George, this spending bill is only 2 trillion or 3.5. Yeah, this one. But what about the one we see in 3 months? And what about the one we see 3 months after that? We're at a point right now, just like quantitative easing, except now it's government deficit spending. And that once you go down that path, you can never come back. It's like the Hotel California. The problem is, just like with quantitative easing, how they had to do more of it and more of it and more of it and more of it to get the same effect. In my opinion, it's going to be the exact same with government deficit spending. You have to have more and more and more of the drug to get the same effect. That's why I say, even if this current package is 2 trillion, just give it 3 months and we're going to see one that's 4. Give it another 3 months and we'll see one that is 8. And see, my point here is that even if you could pull off this tax, you're talking about a number that at the end of the day is absolutely meaningless, which shows they're not really doing this to help pay for childcare, as an example. They're really doing this just as a vendetta against people who have produced a lot more than others. And then here's what Janet Yellen said about this. And I want to be clear too, that a lot of people say, oh, well, Janet Yellen hasn't really talked about an unrealized capital gains. They've been talking more about a wealth tax. No, they've changed their tune as of today, or a couple days ago. It's now the unrealized capital gains. And this is Janet Yellen saying, I wouldn't call this a wealth tax, but it would help get at capital gains, which are an extraordinarily large part of the incomes. Let's stop right there. Is a capital gain a part of someone's income? I don't care how rich or poor you are. No, absolutely not. That's why it's a capital gain. That's by definition, it's not income. So, just another red flag that proves she's being completely disingenuous. And this is just propaganda that's coming down from the administration, that she is just parroting as one of the useful idiots. So, extraordinarily large part of someone's income, of the wealthiest individuals right now, escape taxation until they are realized, said Janet Yellen. And then further on down the article, they say the tax is expected to affect people with $1 billion in assets or 100 million in income for 3 consecutive years, according to a person familiar with the discussion. The idea for President Biden recently expressed support after excluding it from his campaign plans and administration agenda. This would affect a narrower group of people than the capital gains changes that have already flopped among congressional Democrats. So we couldn't pass these widespread tax increases. So let's just narrow it down. So although it really won't move the needle and help us pay for stuff, at least it'll send a message to our constituents that we're actually doing something by not helping a certain population, but by hurting a certain group in the population. We want to punish them. So this has nothing to do with society at large. It has everything to do with just punishing a small group of individuals and Americans who I understand a lot of them inherited this, but a lot of them did not. And if you actually look at the richest people around you, most of them, the people who are, I would say, of net worth between 10 billion, or excuse me, 10 million and probably $1 billion. Most of those people earned it themselves. They probably had nothing to begin with. I would doubt that very many of them are even college educated, but they have a lot of common sense and they have a lot of drive, ambition, and they know how to manage people, solve problems, and they're just, again, incredibly ambitious. That's usually the key to a good entrepreneur, someone who's going to create jobs and create the goods and services that equal the amount of wealth that a society has. And so again, you never hear them talk about hard numbers because the general public would look at that and say, well, what's the point? We're going to spend 20 trillion and we're generating 50 billion. Why are we even going, why are we bothering with this? And that just, see, they don't want to do that because then it shows their true intention, which is not to help people, it's to punish a small group. And then Elizabeth Warren says that she thinks it's likely, that's why she's pushing hard. Pelosi said Sunday the tax on the billionaires' assets would likely only generate somewhere between 200, okay, I said 50, I was off, 200 to 250 in revenue over 10 years, for heaven's sakes. So that would be like $20 billion a year. And this is when we're running $5 trillion deficits. So again, the fact that they're taking mental bandwidth to really push this just goes to show you that it has nothing to do with helping society and everything to do with just trying to gain more political power by making their constituents believe they're actually sticking up for the little guy. But let's take a step back and ask ourselves, how do these increased taxes play out in the real world? Well, regardless of whether we get an unrealized capital gains tax, a wealth tax, increased income tax, or whatever they're doing, it's making the tax code more complex. And then as it gets more complex, it's harder to comply with. And the harder it is to comply with, the more resources it takes out of the private sector just to make sure that they're going through the motions and that they're dotting their I's and crossing their T's. So, do we really need to burden the average entrepreneur even more right now? Is that a good idea? Again, we have to look at this through the lens of, is it going to help our society produce more goods and services or fewer goods and services? And I know a lot of you watching this video right now that have probably never owned a business are saying, oh, boo hoo, George. Those poor entrepreneurs driving around in their Ferraris and lighting their cigars with $100 bills. Yeah, I'm really feeling sorry for them that their tax return is a little more cumbersome. But I don't think you understand how cumbersome. Let me give you an example. Let's go over to Twitter. This is a tweet that I just sent out, and I'm not going to tell you whose tax return this is, but this is a tax return of a very good friend of mine who's an entrepreneur that's doing everything he can to create more goods and services in this deteriorating economy that's on the brink of collapse as a result of the meddling from the central planners, the central bankers at the Fed, and more specifically, the politicians who are coming in and creating this additional burden on my friend and other entrepreneurs almost daily. Where if it's not some sort of mandate where you have to fire 10% of your employees because they're not willing to inject a foreign substance into their body, if it's not a small business that's being wiped out by the government coming in and locking people in a cage and not allowing them to go outside, or just outright forcing you to close your business. If that wasn't enough, you combine that with the tightest labor market we have ever had in US history. You look at the supply chain disruptions, all the supply shortages that are going into these small and mid-sized businesses that allow them to produce the goods and services that they do. But then on top of that, you see how much mental bandwidth they already have to allocate to dotting their I's and crossing their T's when it comes to taxes. And this is represented by this one person. Just this is one person's tax return. One right here. This is a stack of papers, call it what, 2.5 feet high for an entrepreneur. So you may say, oh, George, that's not that big of a deal. It's their accountant that's doing that. Yeah, kind of. But if you think that you're the entrepreneur, and even though you delegate this to other people, if you think this doesn't take hours out of your day, or let's just say that it takes a total of 2 weeks of time out of your schedule every single year. Okay, times that by how many entrepreneurs we have in our society, and then you can really start putting a number on how this affects GDP. And more importantly, how this affects our ability to produce more goods and services, or even the same amount of goods and services in the future. And keep in mind, this is my friend's tax return prior to the unrealized capital gains that will most likely affect all of us in the very near future, even if it affects the 1,000 billionaires right now. This is prior to a wealth tax. This is prior to whatever other tax scheme that they come up with. This is prior to them saying that we want the IRS to basically play big brother with every single bank account in the United States that has over $600 in it. So if an entrepreneur's tax return looks like this right now, my point is in 5 years, if these central planners have it their way, this tax return is going to be twice that high, twice that large. And then let's say now that entrepreneur is allocating 2 weeks a year to this. Now they're going to have to start allocating 4 weeks, 5 weeks, 6 weeks, 10 weeks. It's going to get to a point where half of your mental bandwidth is just specifically focusing on government regulations, red tape, bureaucracy. And you're only able to allocate 50% of your mental bandwidth on actually doing better in business and increasing productivity to offer a lower price to consumers, or in this case, even offering them a good or service in the first place. When we see how many shortages we pretty much have of everything in our economy. So main takeaway here, and what I wanted to get across with this video, is just to show you that yes, we are going to have more taxes, but the cost of those taxes is going to far exceed any type of benefit that the Pelosi's, the Warrens, the Bidens of the world like to sell you that we are going to have. That this is a simple cost benefit analysis shows that as a society, as these taxes increase and the regulatory burden on entrepreneurs increase, the society will become poorer as a result. The society will not become richer. That I can assure you. What's to say they won't drop from millionaires to billionaires? That's exactly my point. And it'll start with billionaires, but then it'll go to millionaires. And then also, let's keep in mind they don't have anything that adjusts for inflation. So let's just say for a moment that it's billionaires. Okay, well, let's not forget every single person in Venezuela is a billionaire. Every single person in Zimbabwe, in Weimar, Germany, they're all billionaires. In fact, most people in Colombia are billionaires when you look at their local currency. So if you get enough inflation, or in the last video, we talked about Dorsey saying that we're going to have hyperinflation in the future. You see, my point is if we get a significant amount of inflation, then everyone is going to be a billionaire. You are going to be a billionaire, every one of you watching this video right now. And therefore, you're going to fall right into the unrealized capital gains. And oh, by the way, let's just say that you do have capital gains that is taxed. Okay, well, does that go up in real terms or nominal terms? My point is they're going to be taxing your nominal gains, not your gains adjusted for inflation. So let's say your stock portfolio goes up by 10%, but the rate of inflation goes up by 20%. Well, you would be losing purchasing power, but in the eyes of Janet Yellen, Elizabeth Warren, Bernie Sanders, Joe Biden, you would have to pay taxes on that 10% gain, although you lost purchasing power when you include the rate of inflation. You see how this can lead to an economic disaster. Take a gander at the Silver Fest 2 upload Puish. The event is happening 28th, 30th virtually, and it's free. I think you'll like it. Okay. I appreciate the heads up. I don't know if I've got time to go to it myself, but maybe some of the viewers will get a kick out of it. All right, guys, enjoy the rest of your afternoon. Make sure you always stand up, fight for freedom, liberty, free market capitalism. And we'll see you on the next video.